Hey, random internet strangers, it's Random Forex Guy. Uh, like I said, I only have 15 minutes, so let's get right to the charts and let's take a look. As you can see, my prediction is coming true. Got three nice green candles, a nice little bull run. Nothing dramatic like what happened last week when you had a 27% increase, or but maybe it might turn into a run like this, or a slow and gradual buildup to the big payoff here at 14,000. We just don't know. As you can see right here, there was some gradual buildups and, strikes and spares, gutters and spares, whatever. And so we just want to stack the odds in our favor. And that's what we do is with probabilities. It doesn't mean that it's going to happen. We just want to find the most probable event that has to happen. That's why I, you know, preface things by saying it could go lower because it could. And once again, I am not a financial advisor. This is for entertainment and educational purposes only. Read my disclaimer on my website for a full disclosure of that and who I am. But this, and getting back to the charts. Uh, okay, so suppose you got in. I got in on this candle right here. I got in right about here. So I'm making a profit right now, a couple $100. Uh, and unfortunately, my Coinbase is still giving me hassles. So want to talk about that for a second. I think that the delay time has been increased between the time you can get money on Coinbase, get money to trade it on Coinbase, and then be able to remove it and take it off Coinbase to another exchange. Take your Bitcoins or your fiats and take it to another exchange. Because they're talking now that I can't move my initial deposit until the 1st of December. So what I did was that I hopefully canceled my big order and I was going to put it directly onto Coinbase Pro instead so that I can do limit orders because I don't want to pay their fees. I ate the fees on Coinbase because I wanted to get in. At least I got in a little bit. And so I got some skin in this game right here. But anyway, so we're in. Hopefully you got in down here on this candle. If not, it's still early. It's still way early to get in. So what do we do once we're in? Okay, so we're going to add a few indicators here. Just a couple. You'll see that people got charts, got all kinds of crazy indicators and, bells and whistles and alerts and stuff like that. You don't need any of that stuff. So first we're going to put on our good old support and resistance. So type in support and resistance and where you want Barry. That's the one I like. There's a couple of good ones out there, but this is the one I like. It's one of my favorites, so we add that one on. And it's based on fractals. I don't want to go too deep into that. Don't have time. Let's move on, and we are going to add a moving average. We want the moving average is basically just the mean, the average of X number of candles, a certain number of candles back. So it gives you the general direction. And I like exponential. What that does is it makes it react a little bit faster than a simple moving average. And we go over here and we're going to go, we got our volume, we got this, and then we got our EMA. We're going to change that setting. So we go to settings, the little cogwheel here, and we're going to go to inputs and the length. We're going to bump that up to 20. And what that means is we got 20 days prior candles worth of information that they're going to average together, and exponentially as they get closer and closer to the first candle it becomes more reactive. So this helps us determine a longer, lengthier trend over a course of 20 days or 4 months. You can go as high as 28 because this market goes 24/7. But like stocks and stuff, 20 is a good one because uh, the market's closed on the weekends, so there's no candles on the weekends. So as you can see, on the 20-day or 4-week moving average, we are still in a downtrend. So a lot of people like to wait until we cross a moving average to confirm that we are back in a trend. So if we pop up to this, I guarantee you it's probably going to explode just like this candle is. And we got to hang in there because there's a lot of supply up here. See the big long wick? And these lines here. There's probably going to be some resistance here, maybe a little bit up here from this area. And then this where is going to be our first take profit area, right here, 14,000. That's where the first wave peaked out at. And what we're going to do is once it gets up there, it might jag around here a little bit. Who knows? Just go up and down. You'll see a lot of people that do a lot of predictions and stuff like that. Nobody really knows. They can get a general idea. But I do definitely see a pump once this pops up above the 20, because a lot of people lose the 20, the 50, the 200-day moving averages. Uh, I like to use levels and the 20 because I like to get in things early and fast. So the level got us in. Now, if you want confirmation before you get in, I guarantee you we will pop up. I can almost guarantee it 100%. But like I said, it's a probability. But the way the markets work is you got to follow the herd and you got to jump on it when. And I like to be ahead of the herd. And a lot of people are waiting for this event to happen, for it to cross. Next event people are going to wait is this one. So I expect a lot of volatility up here. This might go up and down for a few days before it takes off again. Here, not so much. There wasn't a lot. I think once it gets past here, that we will start seeing an uptrend. I don't know when or where that's going to happen. Could be next week, could be next month. I don't know. It might even drop down a little bit. It might get rejected from this and drop down a little bit. I don't expect it. The news cycle's pretty slow. So, I just wanted to make sure I wasn't running out of time. But this is where our first take profit's going to be. You might want to get out a little bit early. The liquidity might have started thinning out. A lot of people are going to get out right there. They're going to get scared. They're going to take their profits and they're going to leave and take everything off the board. So we're going to take, I mean, that's what I'm going to do. I don't know what you're going to do, but I'm going to take probably about 50%. I'm going to, once we get to that level, I'll be able to determine exactly how much I'm going to take. I'll start kind of looking right here at 12,003, 12,4. That's at the top level here. I'll begin to look at price action and what's happening there. And I will determine whether I think we're going to continue or whether it's going to fail or not. And do that by candle analysis. And the candles are going to get really wacky when they get up here because the volume is going to start picking up really fast. So more than likely I'll probably take half off the board here. Maybe just a third. I'm not sure yet because that was the top of the second wave. If we go back to the first wave, it topped out at 20,000. And this is projected to happen sometime after the halvening, sometime in May. That we will start seeing a lot more volatility. The halvening will happen. A lot of things are going to happen. The stock market's going to have to tank. Uh, and there'll be a rush. There'll also be a rush for gold. And everybody wants to find assets that are safe. All the people that have money. This is how rich people handle their money. Is then the market's hot and money's cheap and the economy's doing good, everything goes in the stock market. When it's not so hot, You know, if Trump gets impeached and removed, I guarantee you the stock market's going to crash because they are depending on Trump to feed them free money. If you watched my bank currency, how currency is generated and manipulated, and how it's backed by your taxes, and how that should piss you the fuck off, uh, you know, you need to go back and watch that. But that's the next level. I'll probably take another half of what I have left over to a third and let the rest run, and I'll probably put a stop somewhere um, at the 14,000 level. I'll follow the stop up so I won't lose any more than doubling my money. That's the worst case scenario, is to double my money. So that'd be at 21, that's triple my money. And then I'll just let that other third ride and follow the stops up as I see fit. As the market, as I said, this market's a lot harder. It's a lot more volatile, so it's going to be a lot more tricky to follow the trend. Uh, if I get stopped out and I still think the market's moving, I'm just start buying the dips and continue, because there is talk and speculation that it might go as high as 100,000 by the end of 2021. I don't know how true that is, uh, but considering that the largest hedge fund in the world, I can't remember the name of it. I think it's Charles Schwartz owns it or something. Somebody, I don't know. But they got billions of dollars. Like, you know, they're ridiculously stupid rich. They have what's called an option expiry, which I know nothing about options, but they've placed it way down low on the New York Stock Exchange. They are expecting a crash sometime. I think it's I can't heard if it is going to expire in May of 2020 or 2021. But what that means is they're gambling that the money that the stock market is going to crash by May of either 2020 or 2021. That's the largest hedge fund in the world that is doing that. And I don't know anything about options. I couldn't tell you. And from what I understand, you have to have a lot of money to run binary options. They got websites where you can do like these mini options and stuff. I don't recommend it. It's too risky. I like safer risk, less risk investments with good return reward ratios. And the fundamentals are so strong with cryptos right now that I see this as almost a no-brainer. It could go lower. It's quite possible that it could go lower, but the fundamentals are solid. It's established itself as a new player, but it still has to test through this upcoming recession that's being predicted by some of the best minds, economic minds in the world. So I want to wish everybody a happy Thanksgiving. Hope you're in it to win it, because I guarantee you're going to see a pop once we hit this line right here. And then there's the 50 moving average. That's that's the next one. So if we go here, oops, that's wrong one. Running out of time. A few minutes. Okay, got around 9 minutes. The 50 will be the next line. That's the next one. And then the 100 and the 200 is what these are the people, particularly people that came from the stock world. The Forex people don't pay much attention to these, but the people in the stock world love these things. And they are very herd mentality. Forex is a little bit different. So we change that to 100. And that's all you really need is you need a place to mark your levels and a place to mark your fast trend, which is the Heiken Aishi, and your slow trend, which is the EMA. That's 100, so see we're getting close to that level. And the 200. Oops, not 2000. But people love these moving averages. And see, that's almost flatline. See, it's leveled out. It's gone from an uptrend to level out. So that's all we have, folks. Happy Thanksgiving. Try not to eat too much. Eat your veggies, stay away from the starches, and have a good day.